The big question is, how long are bad days?
How
Like,
long?
like,
Bad
like
days. Too freaking long. Okay.
yesterday was a little too long, but how long do bad days last? Like, if you have a crappy ass day like yesterday, when's it over?
I mean,
Obviously, one day.
yeah.
But
I mean, all you gotta do is look no further.
yeah,
I would have said weeks. I mean, how long is a bad day? Weeks is what I would have said.
weeks. Okay.
Yeah, that's what I would have said.
What do you think is the worst? When we had bad days or like bad stretches in the market, we saw. What do you think is the worst like time? Not going back to 87, but going back, let's say 30 years.
What year or how long of a time frame? 3 months, maybe?
What year do you think it was? What sell off in the last 30 years, going back to the mid 90s? You think it's been the worst sell off as far as recovering?
I don't know. I don't know.
2008, 2009.
Oh, was it really?
It took almost a year and a half. But other than that, most of the
Like all
sell
these
offs,
young kids have experienced.
well, other than that, most of these other sell offs have been pretty manageable. Let's take a look. So between the close on Friday and the open on Monday, the SPX fell 4%. Traders who started during the pandemic have never seen such a thing and might well think the sky is falling. More seasoned hands know that eventually the market has always bounced back. Historically, when the market has fallen, when the market has taken a sudden drop, how long has it taken to recover? This is your $1 million question.
I mean, what's a recovery? I don't know. Like,
Let's take a look.
okay.
So using 30 years of data in the SPX going back to 1994, we found the 10 largest down moves. We looked at them from close to close, from open to close, and from close to the following opening. The difference between a weekend and an overnight move was ignored. For each day, we looked at how long it took for the SPY to return to its value before the drop or higher. These are like the 10 largest, like 1 day down moves. So the first one is close to close. And this is older because we don't have enough room on the slide. So this is from 1997 to 2008. And you can see that most of those moves are about 7%. Now remember, last night was only 4%, but the index was a lot lower then. In 2008 to 2009, it took 562 days. That was weird. All the other moves, and we're talking about, that's long-term capital management, the first one. The second one is, I think, the Victor Niederhofer move. And so
Is the move named after him?
I think he does. I think it's Victor Niederhofer's move is the 19. I can't remember if Victor Niederhofer was first or the long-term capital management was first, but one of those two moves. 7 days, 14 days, 4 days in 2008, the second time, and then we had a 9% move, we had 20 days. But the first one, the 2008, 2009, the first move of 7.8%, that's the one that took a long time. Let's go to the next slide. These are going to be closer in. So this is, and you can see a lot of those down moves happen in 2008, but 4 days, 7 days, 72 days, that was the pandemic in 2020. 26 days, these are all pandemic moves, and then 22 days, that first pandemic move. But you can see the pandemic move had some big ones. Now, this is open to close, okay? Open somewhere, close. These moves, again, the 2008, 2009 was the big one, but all the other ones were pretty manageable days, except for that 2008, 2009 period, that was really scary. Not scary in the market sense, because the market was already down to like 800 or 900 in the S&Ps.
That was when the NASDAQ took almost 10 years to get back to its highs, right?
Yeah, but in 08, 09, just so people put this in context, a 6% move was only 50, was like today's move. That's a 6% move. It's 1% today. It was 6.4% then. The index was only, let's call it 900, whatever. It was 800. A 6% move was 50 handles. That's where we are today. So it's a little bit weird, but that's what it is. This is going to be the newer ones. So this is kind of a little closer to what we're doing. You can see here, 2 days, 5 days, 1 day, 2 days, and 4 days. And again, these are all like intraday moves, open to close of 5% and stuff. Remember, yesterday was only a 4% move.
Yeah, right.
Interesting. So this is close to open. And this is like kind of the overnight. Okay. So, and overnight moves tend to recover the fastest. So the drop in 2001, 8%, and then these are the biggest overnight moves. They're not that crazy. 5% in 2015, but look at the number of days it took to get back. 3 days, 3 days, 3 days, 4 days.
Nothing.
Like nothing.
I wouldn't even be.
Let's go to the next slide. And these are the newer ones. They took a little bit longer, But in 2020, the pandemic, 72 days, 26 days, 22 days. The overnight moves were pretty big during the pandemic because people were freaking out. In 2024, yesterday it was 4%. It's the 10th largest out of 10. And we'll see how long it takes to recover. But, we'll see. Who knows? I mean, vol for sure, it's down 5 handles today.
Yes, it's still 25, which is a number we would have.
I understand, but it's down 5 full points.
Yep.
So this is interesting. Most of the other largest one-day down moves took place during the dot-com bubble burst, the subprime mortgage crisis, or the COVID crash. That's for sure. While they're not going to say that this is the new yen unwind, it's not going to happen. Trust me. While the longest of these, from 2008, took a year and a half to recover, many of the other ones bounced back within a week or a month. While it's likely necessary to adjust and protect ourselves from a continuation, it's also important not to panic. That's why we did the show the way we did yesterday. Just calm everybody down. Last weekend's drop, yesterday, was the 10th worst close to open move of the past 30 years. But including the intraday action, it didn't even rank, and large overnight drops tend to recover faster than close to close or intraday moves.